Good morning, everybody. Welcome to the Flow Show, Wednesday, 26th of November, and the day the UK goes skint. So I might not be here tomorrow. Might have to sell some kidneys or something to pay the tax bills after Rachel Reeves has finished with us later on. But no, we will survive, as always. Morning, Kate.
Morning, Ryan. Morning, everybody. Yeah, we've got our pre-Thanksgiving stuffing today with Rachel Reeves upcoming, right?
Yeah, won't be able to sit down for a week. Anyway, let's move on before we really get in trouble. Right. Japan. Well, no, not Japan. I'm going to, as always, kick off with our sale just to let you know. Keep your mind on it. We've got our 30% off sale. I'll put the link into the chat room in a moment. So don't forget to get on that. That runs till December the 2nd. 30% off all plans. Be quick or you miss it. That's all assessment plans, instant funding plans, and the like. So 30% discount off there for Thanksgiving. Use Thanks 2025 at checkout. Right, that done. Now we can get back into the rest of it. If I can find my notes, there we go. Takeichi was out again talking responsibly, shall we say, saying that JGB issuance for this fiscal year, including expected issuance for the extra budget, will be below the size of last year. And then that was a pretty funny comment, given what day it is. She says, don't expect Japan to see a trust shock type market rout. That'll go down well in the household of Liz Truss. There's different arguments about that, but I'll leave it there. For the yen, the BOJ's yen index, the Yendex, as I'm calling it, was pretty much unchanged, came in at 75.61 versus 75.64 previously. Yen pairs have had a little bit of a pause, shall we say. They've had a little bit of a move lower, but we've had a little bit of a bounce as well. So maybe we might be looking at a bit of slowdown there in that yen strength. Coming over to the data, a big night all round. We had Aussie CPI kicking things off, coming in hotter than expected. Whichever one you want to look at, really. The year-on-year numbers, trim mean coming in 3.3% versus 3.2% previously, though that was an upward revision. Their weighted mean CPI coming in much hotter than expected at 3.8%. The other weighted mean, they like to have 85 guesses at this one. Different, they call it different stuff. Anyway, that came in hotter as well, 3.4% too. So that's the RBA potentially sitting on hold for longer. Now, on the other side, we had the RBNZ cutting rates by 25 pips as expected. And one of the outcomes was they moved to the sidelines, which they did. They said that future rate moves are to depend on inflation and the economic outlook. They say that forecasts still show some chance of one more 25 pip cut in 2026. The vote was 5-1 to cut rates. Governor Hawkesby said that the track is consistent with the OCR being on hold in 2026, saying that the cash rate is now stimulatory. So, as I said, one of the outcomes there from the RBNZ is that they are moving to the sidelines, but they'll keep the door slightly ajar for another cut. Talking about this previously in our room. 2% is a nice round number, should they want to do so, and nick a little 25 pipper sometime early in the new year if data necessitates. Kay, that was all pretty much as expected, but the real move was in the Kiwi more so than the Aussie dollar.
Yeah, although the Aussie jumped on the inflation data, the revisions were quite significantly lower on that Aussie CPI. The non-trimmed and non-weighted, as you say, there's so many measures that they do over there. Yeah, I call the RBNZ hopiumish. It's not it's undovish, unhawkish, not anything of the likes, but hopiumish. The statement, read through it when I sat in front of the PC this morning, and it was all about we have done our bit to stimulate the economy. We expect peak inflation. We expect peak unemployment has been seen. We expect spending to get up. We expect housing to rebound because of lower mortgage rates. So everything is. Uh, if you want to believe them, they have done everything for the economy to go all rosy from now. So that little part remains to be seen. Yeah, 2.25%, as I said yesterday. If anything doesn't materialize like they would wish, they have that 25 BPs to play with. Yeah, that's about it's about whatever I can say about it. I mean,
Yeah.
we'll look at the we'll look at the rates later. I mean, both of them stopped ahead of in interesting levels on these bounds. So I'm not sure if either of them are completely out of the woods, but let's see, because you can you can be one side, lean one side or the other as a central bank, and but you still have the data to show you that or to show us, better said, that they were right in being so optimistic.
Yeah, absolutely. And yeah, we'll look at that. But potentially, that's another central bank that's ending its cutting cycle,
Mm.
moving into neutral, and that's an influence you've got to look at for pairs like Aussie Kiwi, where it's been a double wind, both hotter or a less dovish RBA and a continuing cut in RBNZ. Well, now maybe one of those elements has fallen by the wayside. So you have to watch what goes on from that point onwards. But yeah, we'll look at prices shortly. A bit of retailing data out from the UK yesterday. The CBI, they called it distributed retail sales or reported sales, came in at minus 35 versus a prior 27. For composite retail sales, that came in minus 32 versus a prior minus 30. However, the quarterly number, and this is the sentiment number for retail firms for the UK, was at the lowest since 2008 at minus 35 versus minus 10 in the prior quarter. That was back in August. So things aren't looking good there. But, you know, the CPI, they're always a bit of a glass half empty mob, that lot. I can't even find it on there. There we go, right in there. Right, so we've got the budget today. There's loads of last minute bits and bobs being thrown around. One thing of note was that Reeves is going to increase the national minimum wage by 4.1%, which of course is inflationary, coming from a chancellor who says she's going to bring inflation down. So he's just raised it basically. So that's going to be an increase there that will come through the pipe soon. Now, we've done a lot of talking this week over the ins and outs of the budget. There was a poll amongst gilt dealers yesterday. They're expecting a median budget headroom of 16.9 billion, call it 17 billion, which is, give or take, pretty much in the middle of the last reports that we heard, that her headroom was going to be somewhere 15 to 20 billion. So that's what the market is potentially going to be looking at. That's a bit of a gauge if you're trading this one today. Back in March, the OBR had forecast that 10 billion or 9.9 billion headroom, which disappeared in a puff of smoke after that budget. They also expect 2025-2026 public borrowing to be revised up to 130.8 billion. Again, that's higher than the March OBR forecast of 117.7 billion. So as I say, it just gives you a bit of scope to what some in the market are looking for from this budget, and we'll get moves based on those expectations either side. So just to run through this quickly again, well, not all our expectations, but the mechanics of it. The budget kicks off in just under 2 hours after Prime Minister's question time, which is a bit of pantomime if you want to go and watch that first. She will list all her stuff that she's going to be doing. We'll get the list and we'll find out what. We'll get the latest print of these OBR forecasts, which the market will look at and say, don't ask me why, because they're they're useless at forecasting anything, but the market will say, okay, this is good news or that is bad news, that the forecasts are better or worse, and then they'll match it off against what Reeves is doing, how much a headroom she's got. Is it more than that 16.9 billion that gilt dealers are expecting? If it is, that will be seen as good news in bond markets. So yeah, all kicks off from 12:30. If you can stick yourself in front of a screen, it's going to be painful, I can tell you that. Anyway, right, moving on from that. Getting back to data yesterday, we had the funky ADP number coming out minus 13,500. Again, don't know what that means in the grand scheme of things, but there we are. These numbers are coming in more negative than they are positive at the moment. We've got retail sales and PPI data. Might as well start with PPI as it's top of the screen. Overall, there was some up, some down, some all over the place, some unchanged. The biggest take from this, and this is again old September data, we already knew what the CPI data was, is that inflation just remains sticky. As you can see from these year-on-year numbers, the X everything number 2.9 high revision, but was expected to come down, so that's staying sticky. 2.7 unchanged there. This core CPI came down to 2.6%, so a little bit softer, but that number was revised higher. So overall, sticky. Retail sales, that headline came in softer than expected, but still a positive. However, core sales, the control group, came in a negative minus 0.1%. So maybe a little bit of softening there, a little bit of belt tightening going on in the US. Again, this is September data, so it's a bit old, but it's all we've got to deal with at the moment. So the market had a minor wobble, shall we say, on that. We also got the fully fed non-manufacturing services coming in at minus 16.3 versus a prior minus 22.2. Also, house price data, again, just looking a little bit on the softish side. No movements massively on the month. It was flat in the FHFA number, and it was close to flat in the S&P 20 City number as well. Year-on-year numbers just starting to or continuing to creep lower, shall we say, in that metric there. Kay, what did you make from the US data or that lot? Well, we got consumer confidence, which was soft as well. I don't know what we make of it, really. Maybe the consumer confidence over the rest of it.
Yeah, the consumer confidence. One thing that wasn't great. It just confirms the sluggish nature. But again, September, right? We're nearly it's December and Christmas, so those data are, and actually, sorry, those data were kind of reflective of what we saw in those data coming out around that time, like going into the shutdown and stuff. So I guess it's just backward looking, mate.
Yeah, very much so. But it has kept rate expectations on the dovish side still leaning towards a cut at that December meeting. So maybe as we get further data pointing that way.
That consumer confidence isn't greater.
Yeah, no, exactly. And there was a bit of surprise in the CPI number out of that one. It dropped to 4.8 from 5.9, which is quite a hefty shift. I don't know if there's something behind that, but that was a big old number. Expectations dropped as well to 63.2 from 71.5, and there was a small drop in the current conditions as well. We also got some pending home sales data, which was okay, up 1.9%. So at least the housing market is holding on okay. So again, it's what we've been seeing really before the shutdown. Just the economy ticking along. There's nothing falling off a cliff. There's softness here and there, but nothing to really worry about. Right, Fitzmirren back on the dovish bus even more than last time. He says the economy calls for large interest rate cuts. Seems like his marginal 25 pip call is out the window. He says that he hopes the jobs data will convince others on the Fed to cut rates. We had a little bit of movement on the old Fed head job. Bessent came out saying that we have 5 strong candidates. Then later on, we had a sources piece from Bloomberg saying that Hassett is being seen as the front runner for the Fed job, which the market didn't like in terms of the hawkish, dovish chart, taking that as a pretty negative move for the dollar and for rates as well. Bessent also popped up talking about the Fed, saying that the ample reserves regime might be fraying and it's time for the Fed to move into the background. So that's something that may rear its head later on, depending on who becomes Fed chair, if it's Hassett indeed. Over in Ukraine stuff, a US official was saying yesterday that the Ukrainian delegation had agreed with the US on terms of the potential peace deal. Later on, Zelensky came out saying he's ready to meet Trump over Thanksgiving, if necessary, to finalise a deal. And in a bit of a strange headline, US envoy Wickoff said that it was reported that he advised let me start that again. US envoy Wickoff advised Russia on how to pitch the Ukraine plan to Trump. Apparently, he spoke with senior Putin advisor in a call on the 14th of October. So he's telling the enemy how to get a deal done with Trump. Very strange, but doesn't seem to have bothered Trump because he's sending Wickoff off to meet Putin in Moscow next week. So things are warming up there. It looks like we could be on the cusp of something finally. We might be jumping out of one frying pan and into the fire because the Taiwan president has warned of intensifying China threats, saying that China is increasing military drills and grey zone harassment near Taiwan. And this is, again, something that Mark in our chat room pulled up about that conversation with Xi and Trump. Some of these communications are very language orientated. There's specific lines, text, insinuations in these communications. And apparently he found a story where basically Trump missed the whole point of what the communication was from Xi, which was pretty much Xi reaffirming that China and the US have certain commitments post-war. One way of calling it the spoils of war, or what happened after the war, and that involves, if you remember, Japan being on the other side, not on the same side as US or China. So a little bit of language tinkering going on there that apparently Trump missed. But Kate, this Taiwan thing is building up a bit now.
It's been going on for months and years. But,
it's been going on, but it's heating up a little bit. Do you think China's watching this Russia stuff and thinking, well, if they can go and take territory and keep it, why don't we?
Exactly, and well, I mean, we're not here to be conspiracy theorists, but this whole thing, Ukraine, Russia, China, Taiwan, Japan, is personally, I think, is just one part. Is just a part of one big plan between Russia and China. But no, it is heating up, and that's coming out of that G-Trump meeting. We saw the difference between how US wants to report everything, getting a bit of a victory out of everything, and then the Chinese reporting was straight away that they reaffirmed that Taiwan was part of China, taking then the Japanese comments to the UN. And they've already been sending ships around the Senkaku Islands again. And then yesterday there was this article that I saw late about the Japanese making serious plans to put missiles in the zone. So I mean, yeah, it's all heating up, and unfortunately, it's, as I said, I think it's just part of one big plan to form a front in the east against everything else. Okay. I mean, I don't know what the finality will be, but for the time being, it's not looking rosy. That's for sure.
Yeah, maybe Trump will have to put a pin in his Nobel Peace Prize aspirations, because he might have another one to deal with in a few
Yeah.
months. But
Well,
let's.
they both, if in such a situation, I mean, we know who is pushing for everything. Those who are being pushed, maybe they should man up a little bit and yeah, take their responsibilities. The problem is if you talk about the Ukraine and then Europe. In Europe, it takes half a century to decide upon something. So that's not looking great either.
Yeah, exactly. And if China does invade Taiwan, that would put. It's not like you've got the Ukraine in the middle between Russia and the West. In this one, it will potentially put everyone against everyone right from the
Yeah.
off.
Mm.
But
Absolutely, and then
let's,
and then the US will have to make a real decision whether they side with Japan or not. Because it's yeah, World War II is one thing, but since then Japan has become the main ally in Asia for the US. So make a choice.
yeah. Well, let's fingers crossed we don't ever get there.
Yeah, I hope so.
Otherwise, trading will be the last thing we have to worry about. Right, Canada are still being held by the short and curlies from the US because their October trade data won't be released on the 4th of December. This is due to the fact they get a lot of their trade information from the US, obviously being their biggest trading partner. So their stuff's still getting delayed as well, not for the first time. Right, that's it as far as the news and gossip goes. And has got anything else, Mr. Key?
Uh, no, not really. No. I mean, there were these plans about increased issuances by the Bank of Japan, but I'm not sure if you mentioned that already. It's much higher than what the Shiva plans were, but it does. If you look at the facts and figures, and which are also based on some sort of hopium, it's a bit below the wiggle room that Takaichi may have, thanks to Japanese companies reporting record profits last fiscal year and first half of this fiscal year as well. They are having a lot of profit, and the Bank of Japan also has like a 1.7 trillion surplus. So it could all not be as bad as expected, but the market will be scrutinizing that now, because if she really needs if Bank of Japan really needs to increase the or yeah, it is Bank of Japan who issues the bonds, right? No, it's the Treasury. I don't know exactly. Anyway, that doesn't matter. But if they need to really increase it by 11.5 trillion or so, it may spook the JGB market a little more.
Yeah, but she's still taking a responsible line.
Mm,
I mean, that comment about trust I thought was pretty funny.
yeah.
Going down that route. But yeah, I mean, yeah, it seems like she's got a tight grip of it for now. Whether it stays that way is another question. But
And she's actually doing pretty well in the
in the
popularity poll,
rating,
though.
yeah,
Yeah,
and the
especially
rating as
with
well.
the younger voters, which are, let's face it, the most important ones, right?
Yeah, yeah. I think her approval rating was 72% or something at
Yeah, yeah,
at the
yeah.
last.
It was really great.
I think that's even double what Ishiba managed to get at his peak, let alone, let alone any other time. But anyway, yeah, she's doing. Seems to be doing a good job anyway. Right, let's get stuck into it. Well, let's look at Aussie Kiwi first. I'll leave Kay to look at Aussie dollar. So this one got a bit of a kibosh after the RBNZ. It was a decent move. We're not talking about, massive move here. Did 120 pips or whatever. So pretty decent. It has recovered since. So potentially we're not out of the woods. What has been interesting is that we've just found resistance just coming into where we had this old bit of support. This 38.2 fib is from the 2011-2015. It's also a prior high up and around there various times during the range. So the fact that it's finding a bit of trouble into this area up here might be significant. I think this area is going to be pretty key. If we're holding below here for any length of time, then maybe we're going to see a bit of a stronger top in play, and we're going to head a bit lower. If we get back above this fairly quickly over the next couple of sessions, days, or whatever, then this is just going to be potentially a blip, and we're going to go at least have a look up towards those prior highs or that 116 level in there. So just one to keep an eye on if you've been trading this either side for a while. It's been on a very strong rally. Part of that, as mentioned earlier, has been the RBNZ cutting. If they've stopped, that element is removed. So now it's got to go up on just one side of the coin, if you like. So I've had a little nibble short, just a tight one, just to see if this level holds around here. But the big level below is going to be this 112.85, also the 38.2 of the whole rally since April. This red line is an old historical part of the range top that's been running for over 10 years. So it's some big levels that we had on the way up. As you can see, we held, we broke, we hold. So getting back down there is going to be really important for this one. Dollar yen, that was looking pretty good in terms of continuing to see strength, but we've seen a pretty decent bounce this morning after making a new low overnight. Whether we're done or not, I don't know. This could just be a bit of a bounce, and we're going to continue the downtrend. Certainly, if we're getting above this 156.50s, then we're probably going to have a look at another look at the 157. And if we hold that again, then that might bring about a steeper pullback, maybe something that heads to the 155. If we moving back above this 157, then this might have just been a little bit of a blip, and we're going back to doing what we were doing before. And then we're going to be pushing up, and the old Ministry of Finance is going to be getting a little bit warm in their seats. What has been pretty notable with all this move is that we broke under 156, 155, 90s, but we can't stay below there. So this little area around here is going to be pretty important. We've been below, we can't stay below, and just found a little bit of support after we made that low into that 90 area again. So just keep an eye on that one. If we get another dip down there that holds, then it's going to look like, as I say, maybe this was just a bit of a blip, and we're going to be heading higher once again. Euro sterling, talking about this often enough. The last month or so, it has been walking a very tight line, staying pretty much in this range, 88.30s, 87.70s. Today is the day. It's D-Day now. Three possibilities. The market likes it. We see this dropping 87.20, 87s. If it's really good news, I would imagine we'd probably be breaking 87s and maybe having a look down at these sort of mid 86 area. On the flip side, if it's all bad news, we'll be up testing those highs pretty quickly, maybe even moving on to the 89 level. If I'll just zoom that out a little bit. Obviously, we look at the bigger price risks, but there is also the possibility that she manages to walk a fine line. It's not too bad, it's not too good, and we just end up staying in the range. Now, even so, even if that happens just over the budget, that's fine. We've still got to look at the longer term implications. Okay, so what happens today in price action doesn't necessarily mean that's what's going to continue over the months ahead, and that's what we've got to look for. But certainly, bad news, we're going to be up testing this zone again, which is a bit of a sticky one to get through. Kay, I assume you're pretty much in the same boat. Just wait and see. Let's see what the details are.
Oh yeah, I'm just tiny bit in, just to say I have got a chip on the table, but we will see after the budget what's going to happen. It's the thing is, since all those measures, etc., she will probably announce them one after the other, and then we're going to have swings in the market. So really, I'm going to try and wait for the dust to settle a little bit, and just use the UK gilts as the guide. You know that's going to be the market that's going to decide upon the sterling strength or weakness in the end. For the time being, they haven't been showing too much signs of stress, but I still think that in the end, it's not going to be a too friendly budget, right? You're on the US.
Just yeah. Why am I on the bloody US? I was thinking, where's the gap? Oh, there it is. There's the gap.
Oh, the gap. You're trading gaps now. Oh my God. I mean,
No,
ugh, where
I'm
where
not trading them.
where are we
I'm
going?
not trading it, but it's
Where
a
are we
marker.
going to end up with this show? I mean, you really. I mean, dear. Okay.
This gap was significant because it was where she knocked out the income
Yeah.
tax hike.
Yeah.
So
Mhm.
it's fundamentally important rather than technically important.
Yeah. Yeah, it is true, and I wouldn't be surprised if we see a bit of gaps this afternoon as well. When while she's talking, the gilt market trying to, it's going to be typical. I think if you take it back to euro sterling, I think we could be trading 87 and a half and 88 and a half, and then or 88.30, and then but do both sides, and then still I have to decide what's
Yeah,
going to happen. I mean, it's important, right? It is important for investors to know what's going to happen to their money when they are in the UK. It's going to be important for inflation. It's going to be important for so many things, for future growth or weakness. It's really an important thing. So we need to be a bit careful. One move may not be the next, you know.
yeah, exactly. And yeah, as I said, if people really want to trade this, but you don't know what you're doing about the budget and whatever, as I said, look at that headroom, that fiscal headroom. It was, or the black holes and everything was originally going to be a whopping 30 to 40 billion. Then it got shaken down to 15 to 20. Gilt dealers looking at 16.9, so they're in the middle. That will come from the OBR stuff. So if they announce that, it's 10, 15 billion or something like that, that is the whole, then great. If she's built herself a bigger buffer, that'll be good news. So just look at those numbers initially. But as Kay says, the pound is likely to be up and down all through this budget as she announces one measure, then another measure, then another measure, then another measure. So just look for those key points before you're looking to trade it, or wait to the end. Then we know what everything is out on the table, and then we can make a decision from that. Obviously, if you're in our chat room, we'll be covering that as we do, pulling out the light. We're not going to be talking. Well, we'll moan when beer prices go up as usual, but anything really significant we'll obviously highlight and try and pick out for you, and then give our review of how it's going. So a good day to be in our chat room today. Right, Kay, I'm going to knock it over to you.
Yeah, okay, mate. I'm just going to. Sorry?
I'm going to say, just see, we might be able to get an early one done. We can all
Yeah, I'm
have
just
a
going. I'm
lay
just
down before the
pasting.
budget.
Yeah, Fred. Okay, I've pasted the link in our newsroom as well, Fred, on that budget thing. I hope I checked the link, Ryan, because I just hope I
Yeah,
put in the right one. Okay. So after Aussie CPI, RBNZ, what happened? So we had that blip higher because higher inflation data. We know that Bullock has been already hammering on about how she doesn't like higher prints, so that should keep them firm on the sidelines. So we jumped, but again, 65, 20, 30 on the Aussie. I still think it's the gateway to trade higher, and for as long as we don't hold there, maybe now we are just a bit more in a sideways move. Don't forget we still have month-end flows as well in the mix, and other stuff like positive vibes on or negative on the Ukraine stuff could also or even China could also drag this stuff around. But The fact is that we haven't broken yet above 65-20-30, which is really my bigger zone that I'm watching. So for the time being, allow a bit of sideways action. Maybe we're trading around this yeah 64.90 around here. Um, that broken trend line comes in at around 70. You know, we've banged our head against it for a while until we saw the CPI. Um, so that's going to be your first real support, I would say, around 64.70. If it goes back below at any time in the day, maybe we see, as we have been seeing with a lot of those, especially inflation data coming out across the globe, by the way. It does a move and then it can't hold the move. So be watchful if we break down below 64.70-ish, okay? That could spur it back down. It should not drop too far. I would really be surprised if we go really to break this level. I don't think so. But just based on past price action, inflation alone is not enough to keep it higher. But then let's not forget that RBA is at 3.6%, which could become quite soon a high yielder, even compared to the States if they cut again next week, for instance. Kiwi is in a bit of the same situation. Okay, the market must have been running well short Kiwi, which was justified. I wasn't short Kiwi, but it was really looking weak until the RBNZ, and then we had a break above this 56.30.40, moved up. But where did we stop? In the first really serious, okay, one could have argued around 56.70, but then here, this 56.95 figure is the first small retracement, the 23.6 off the whole decline from June, July. And even if we zoom out, that 56.95 is the, where am I? That 56.95 is the 23.6 of the much bigger decline that we saw from September 2024 into April 2025. So I already said, I already spoke about that level, those little lows here as well, to really start to turn this around. We are going to have to break above this zone, okay? We have just a quick look above this 56.90, the high of the 13th of November, but we are now trading back at 56.70. Bit of a hinge maybe for today's move, but both Aussie and Kiwi are not yet convincing for a turnaround. That's just what I want to highlight here, because the first serious resistances, if you look at it technically, have capped, okay, in both of them, right? And then if you want to trade the Aussie Kiwi, that's something that you may want to look at the differences between RBNZ and RBA. RBNZ is now really hopeful that stuff is going to get better from here, so that may weigh on the Aussie Kiwi. The only one little thing, and I agree with Dimi there. We have, since we had this low here, even in April, we stopped really very close to the 23.6 of that move, right in the low 114. So that's going to be a, barring that big level that Ryan showed somewhere in the 112s here, that's going to be the first serious little support here, I think, for the Aussie Kiwi, if you trade Aussie Kiwi. Cable on the budget, as I've been saying, don't rule out, because the market is short sterling, a bit of a short covering in the cable. Why am I not on the auto feed? Bit of short covering in the cable. That's what happened. Where did we stop? Bang on the 13th high at 132.15. That is really going to be the first zone that we watch here on any positives on the budget. It's really hard to put stuff too tight, because any headline here, when the gilts move, could take cable 50 pips away without any problems. I think the market is really looking at this budget for being a guide to do with sterling maybe for the next weeks, if not months, right? Okay, so depending on the data that we will get afterwards. So 132.15, I do think though, to really start ramping higher, we are going to have to break. Okay, this one is going to be, I think, pushing the market maybe, but the real levels appear above here. And then you talk about 132.40.50, and here I think around 133, which has been always a pretty decent zone that the market has been watching and trading around. So this 132 and a half, sorry, up to 133 could be really significant in the cable. What happens if the gilt market and if the market in general does not like what it sees? All of these smaller levels here, 130, 140 used to be a big level, but has been like really been watered down. But could see a little bit of an acceleration, but I think the real levels are going to show up a bit lower. We're talking the first one is going to be around 130, 120, but even here, but I would rather say here, 130.95 figure. And then obviously, if we look at it from a broader perspective, we are going to be looking at that 130, right? Right here, that 130, 130, and that's why I'm also including that 130.40-ish. 130.40, 130, 130.40, 130.10. You know, this is going to be the important one. If we get it close below 130, it's probably going to see quite a bit lower levels. Obviously, the dollar will play, so maybe the cleanest pair, what we have been talking about in our room as well, the cleanest pair would still be the euro sterling, but cable should make a decision and break out sooner rather than later out of that 130, 132, 10-15 zone. Okay. Euro dollar, yeah, it's moved above it's moved above 130 130, I'm saying 115 60 70. We had a quick look at close up to 116, but that's going to be the zone to break. 116 figure 10. If we start to break above there, maybe we are going to run a bit higher as well. Just bear in mind what we've already been saying a fair number of time, even though vols have just ticked up slightly. But the 1 week is no, not yet. Still 1 day to go. Is not yet covering. Is it? Oh no, still 2 weeks to go. Sorry. Is not yet covering the Fed, but yeah, they ticked up really slightly, but we're still at relatively low levels in the euro dollar. So you want to trade a dollar? Not sure if euro dollar is really your best instrument to trade around. Okay, I would just say watch what the month-end flows can do, or if we would have corporate flows today, whatever. I think it's held really well in this low 115 to 115.40 zone. If ever we got dragged into that zone again, keep a close eye on what's going on there. And to finally to close with the metals. Um, Gold is trying. It's not really pushing, but it's trying to get back above this 41 and a half, confirmed through 41.60. We're just turning around at 41.60 for now. Those are relatively smaller steps than what we have seen here, but it keeps the relative positive vibes in place since we've broken above this triangle. I would say watch what's happening if we get back down to 41 in just intraday, right? 41.30, then 41.05, 10-ish. Watch what's happening there on those prior little lows here. If we get a move down and then maybe get back up, but quite significantly was that, to me at least, on the more positive hope for Ukraine-Russia a deal, gold failed to really come down. It just had a quick look lower, and straight away came back up, and then helped also with assets being on top of the list of nominees, maybe for the next Fed chair. That is possibly what is also supporting the metals, because the yields are on the defensive, and actually as we speak, it's not moving a lot, those US yields, but they are just looking a bit slippery. The one that really defied the laws of gravity here, we're back to that prior high. So the lower highs, lower lows picture seems to on the verge of getting broken, okay? Which means that we could get back up into the 53s. Why not even going to visit the all-time high? Silver is really, really big again. I know that a lot of people like to watch the gold-silver ratio to know what's going to happen with the dollar. Well, silver has taken over. If it's significant, maybe it might end up being a bit more significant for the dollar, but I usually don't look at it that way. But anyway, I mean, this thing looks quite big again, okay? So 52, 15, 30, the hinge. If we get back down to 51 and a half, at any point, we know that we can see those kind of moves. These are just 3-4 hour moves, so we can move half a buck in silver easily. If we get back down there and start to hold around 51 and a half, if we get a setback, that would mean that we may start to push higher again. And with that, Ryan, back over to you, mate.
Thank you very much, mate. That's it from us today. We're all going to get geared up for the old bduget. See what mess is going to be left with us. So have a great day, everybody. Don't forget to catch us on Face. They will have one here to the wires. Last one before Thanksgiving tomorrow. There'll be no Face show tomorrow. So get it while it's hot. Thank you very much. Have a great day. See you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.